good weekend all. Epstein with your metal market wrap up, and this wrap up is for Friday. It's Friday evening, the 17th of March, 2023. I will promise you, I'm going to sleep. These markets have gotten me up at 2, 3 in the morning, dealing with clients' issues. As you can imagine, the swings we're getting are insane. We've had a banking crisis that we don't think it's over. I think it's here for a while. What I pray, is another shoe doesn't drop. You had bids going home of gold up. Now, gold was higher than this at the very end of the day. They settle gold. The settlement price is determined at 12:30 p.m., but it trades to 4. It was making new highs. So people were just buying into this. Bonds and notes, the same thing. And this market, the Japanese yen, classic areas to run to with one more. All week long, they have been buying Bitcoin and Ethereum. So did the failure of the banks create a problem? Did the failure of the one big crypto bank create a problem? Well, price is telling you no. The market's beyond it, and the market's now doing what it should do. It's offering to some that believe in that safe haven buying. You're seeing pressure coming into the energy markets, as I think you should. I mean, if people are worried that the banking system and things aren't working, you think they're out there buying a lot with their companies? And what are we seeing? This week we saw the Philly Fed, the Empire State. The business climate is not good right now. It has slowed down rather dramatically. So what's gold running on? Well, it's not inflation right now. It's fear, raw fear. And when you look at gold on a monthly basis, it has been over the 18-month average, so the bias is up. I'll give you the simplicity. My indicators, if you've ever taken my full charting course, I think they make total sense. They're easy to understand, and I only use 5 of them. One of them is the relation of price to a moving average. In this particular case, when you're over the 18-week, I have a bullish bias on a monthly basis. Under it, I have a bearish bias. On a weekly chart, it's the same thing. Now, do you remember just a couple of weeks ago, we saw these markets backing off, and they did this. They had been up. We had gotten back up into the resistance zone, and I said, now if we retrace, I'll look for support to come in at the 18-week average, and from there, the market makes a decision what to do. In hindsight, the market made its decision, and the banking community did it for it. It just exploded in price to the upside. I was scared that this was going to be another one of these cases starting after Tuesday or so, where the gold bulls, they buy it and they get left at the altar. I know I used that term. They didn't. They got embraced by a beautiful bride, and away the market went, all the way to the upside. And now you're up to these old highs, right? It's not uncharted territory. We've been here recently. So now the question is, from March, isn't this funny? A year ago, what was that event? Ukraine. On March of a year ago, we are challenging that zone in price, and this time it's off the banking community. Okay, the trend is up, higher lows, higher highs. The market is over key moving averages. We talked about that the past 3 weeks. Don't believe me? On YouTube, all these are there. Go back and look at what we talked about, and you tell me if that's not what we said. And then the market started coming out to the upside, and as long as it didn't get back under 1808.80, I had to be looking for the upside. So what was I looking for? It's going to be a Bollinger Band. And here it is. And you hit it again this week. So as far as I'm concerned, the professional money, and I know you're going to tell me we're running to the moon, is coming out of gold up at these numbers. Out, not piling in. At the upper Bollinger Band, which is 1973.5. You're going to ask me why. And the answer is in my charting course. It's the Enhanced Bollinger Band course. Take it. I mean, those of you that have taken it, you know what I'm talking about. You get that bearish scenario here the same way as you're getting the bullish one here. I don't know where the market's going to peak. What I know is you're not embedded and you're up to that number and you only stay over at 5% of the time. And I know what you're going to tell me. You're going to tell me it's different this time. It's always different when you're up to those bands. It's always different. No, it isn't. No. Gold-silver ratio into a big zone here where maybe silver gets a bid finally. If it does, it's not trending. It got to the lower band, and that's where the market should have stopped on the downside. Now it's fighting its way between the 200-week average up to the 18-week. If I'm saying day average on any of these are the weekly averages, but I'm so used to saying day. In the copper market, turned absolutely bearish. So until the market gets over on this particular formation, last week's high, and that high was 410.05. You've opened the door up to keep dropping in this market, and it can get very ugly. You've got the trend down, the bias down. You have an ugly environment out there. Banks are going to tighten up their lending standards. That's weighing on this market. China's trying to counter this. Today, what China did is they lowered their reserve ratio by 25 basis points. So there's a very good chance that China, doing its job, can get this market to give you some support out of them. They do consume half the world's copper, so it's something to watch. But there's nothing bullish on the chart. The chart is saying that the pros will be short selling until that 410 is taken out on the current platform, on the current way. The bounce in platinum happened after you hit the Bollinger Band and you're right into the resistance area. This is where the pros are selling short, the combination of the 100-week, the 18-week, and they'll do some short covering back at the 200-week. Why? Because the first challenge of a 200-week, you generally don't just leave it. You can, but you generally don't. It isn't. And last, in the dollar index, you had a big failure just take place. And what is the failure? You had what's called an outside week up. You took out this week's low. I'll come there. That week's low was 104.04.5. You took it out. You took out the week's high, and you closed higher. Then this week, you broke down. Until this high is taken out, you've opened the door up to come back into this area. If you understand what an outside day does and you've taken my course on it, and it would, I think, give you a pretty good understanding of things. So overall, we have a week of central banks. We're waiting to hope, fingers crossed, no more bank issues, things calm down for a little bit. They don't have to. We don't know if there's more problems. We need a better understanding of just what's going on at First Republic, Credit Suisse, all the different banks. You saw that SVB has declared the parent company bankruptcy in New York. I believe it was New York courts today. And we'll see if there's assets left for anybody or not out of all this. I mean, it's a real interesting mess, but it's a mess. Could this have been avoided? Absolutely. How? By proper hedging by the banks. President Biden is right about one thing. I don't agree that you can go after every CEO for mismanagement of a company. Then I think we can go after every politician for bad judgment and their mismanagement. They promise one thing, they do another. It just goes on and on. It's ugly. However, how could that company have just given bonuses and then this happens? Literally a day or two apart, business day. There's something not right there. Is that a clawback? Absolutely, Joe. So, Joe, go get that money. Get it back either for the people or buy the oil we need with it. I'm Ira Epstein. If you want to learn about Bollinger Bands, how do you go about it? Let me give it to you. Watch this right now. You give a click up here, it'll take you right to the education section. You're seeing them unfold everywhere. Do you know how to work with them? It's not that hard. Got a kid in your house that's 18? He'll learn it better than you probably. I'm Ira Epstein. You have a good day. Take care. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.